Have you ever wondered where your banking data really goes? Every swipe, every transfer, every loan application creates data. That data doesn't just sit in the database, it's analyzed by AI systems. Welcome back to Deepverse. This is where we break down AI in a way that helps you build skills, grow your career, and stay relevant in the future. Today, we are talking about AI and financial privacy. Who controls your data and how AI uses it, and why it matters more than ever. Let's get into it. AI didn't suddenly enter finance. It's been there for years, just quietly. Banks and fintech companies use AI to detect fraud, monitor transactions, assess credit risk, and personalize financial products. That means many decisions about your money are made before a human ever looks at them. When you swipe a card, AI checks whether the transaction looks normal. When you apply for a loan, AI evaluates a risk profile. When something looks suspicious, AI is usually the first system to react. Your money is no longer just money, it is data, and AI decides what happens next. Here is something most people don't realize. Big financial institutions don't run on one clean system, they run on dozens. Legacy banking software, modern cloud platforms, third party risk tools, compliance systems, and external data providers. And many of these systems don't even talk to each other properly. According to a 2023 Capgemini report, over 71% of financial service firms struggle to integrate the data across their systems. The same report also found that 70% struggle to protect customer data and privacy, and 69% face serious data quality issues. When data is fragmented, AI models see incomplete information. Privacy rules are applied inconsistently, and decision making becomes slower and riskier. This creates a silent problem. AI systems are expected to be precise, but they're often working with broken data pipelines. And broken systems are where privacy risks grow. AI runs on data. In finance, the data is extremely sensitive. Transaction histories, income details, spending habits, credit behavior. Using real customer data creates a constant trade off: better models versus higher privacy risk. This is why financial institutions are under pressure to find safer ways to train AI. Because once the data is used improperly, the damage is already done, and the cost of failure is so high. According to IBM's Cost of Data Breach report, the average data breach in financial services costs over $5.9 million, the highest of any industry. This is not just fines, it's legal costs, lost trust, and long-term reputation damage. This is why privacy is no longer optional in finance, it is a survival requirement. Finance is one of the most regulated industries on the planet. Banks must comply with anti-money laundering laws, know your customer requirements, data privacy laws like GDPR and CCPA, sanctions, and customer due diligence rules. According to Thomson Reuters, a global financial firm receives around 200 regulatory updates every single day. Keeping up manually is almost impossible, and mistakes are costly. A 2023 Finergo report found that financial institutions paid over $6.6 billion in penalty in 1 year for compliance failures related to AML, KYC, sanctions, ESG, and customer due diligence. This is one of the main reasons AI is being adopted so aggressively in finance. AI doesn't get tired. It doesn't miss any updates, and it can monitor systems continuously. But automation also raises a new question: who controls the AI that enforces the rules? Let's stop speaking in general terms and name what's actually being used. Trunomi enables financial institutions to control access and usage of customer data. It tracks customer consent, data permissions, compliance with laws like GDPR and CCPA. Instead of humans manually checking rules, AI enforces them automatically. This reduces mistakes and prevents unauthorized data usage. Here, AI acts as a privacy gatekeeper. Fraud doesn't happen once a day. It happens constantly. VerseAI uses AI to analyze transactions in real time, but looking at spending patterns, transaction speed, location changes, device behavior. If something looks off, the transaction can be blocked instantly. This protects the customers and reduces how long sensitive data stays exposed. Credit decisions today involve more than a credit score. Zest AI helps banks access credit risk using machine learning, reduce bias in lending, and explain decisions to regulators. Explainability matters. Regulators now require banks to justify why a loan was approved or denied. AI doesn't just predict outcomes, it has to explain them. One of the smartest privacy solutions in finance is synthetic data. Gretel creates AI generated datasets that behave like real financial data without belonging to real individuals. Banks use this to train fraud models, test credit systems, run stress simulations. This allows innovation without putting real customer data at risk. So, after all this, let's answer the real question: who actually controls your financial data? The honest answer is the control is shared, of course, with disclaimers. First, financial institutions control where your data is stored and which AI systems are allowed to access it. Banks decide what tools they use, how long the data is kept, and which third parties are involved. Second, AI systems control how the data is processed. They decide which transaction looks suspicious, how risky a customer appears when an account gets flagged. These decisions often happen automatically and in real time without a human review. Third, regulators define the rules. Laws like GDPR and CCPA limit what companies can do with your data, but enforcement usually happens after something goes wrong. And finally, you, the customer, have the least control. Most of the time, your choices are limited to accepting privacy policies, clicking on agree, or opting out after the fact. That means AI doesn't take the control away from humans, it shifts the control towards the system that design and operate it. So the real issue isn't whether AI is good or bad, it is whether the data access is transparent, AI decisions are explainable, and the accountability is clearly defined. Because once AI becomes the decision layer in finance, the control belongs to whoever designs the system, not the persons whose data is being used. If you had watched this video till the end, do not forget to like, share, and subscribe the video. It really helps us. Follow us to get the latest AI tools, breaking AI news, and smart tips to stay ahead in your career. Thanks again for watching.